'Twas the year of the podcast, and all through the mic, great stories were shared, each one with delight.
The Fintech Combine had listeners tuned to insights and wisdoms our guest finally crooned.
Welcome to the Fintech Combine. I am your host, Kris Kovacs, founder and CEO of Constellation Digital Partners, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. The headphones were donned by our audience with care in hopes that new episodes soon would be there.
One lesson I've learned, Kris, in the last 5 years is that riches are in the niches.
That's a great line.
Yeah. So for better or worse, God dealt me a hand that I had to bet on the credit union movement. I didn't have the wherewithal to going after too many markets. I made a bet.
Right.
Credit unions or go home. Mm-hmm. But once I made that bet, I've stayed laser focused, and we haven't veered in the last 5 years, right? We are focused on credit unions. Of course, we added community banks, so community financial institutions, focused. And then we went deeper and deeper and deeper and deeper and deeper and deeper. Mm-hmm. If you're a first-time founder, that's the key. Pick a market very wisely. And I think what has happened is, Kris, 5 years ago, this whole fintech revolution, remember the first venture tech? Fintech was a very new word, right? Mm-hmm. For credit unions. You were one of the earliest pioneers. I was your student, blah, blah, blah. But I think between you and me, a bunch of other founders like us, we have now proven that rapidly growing fintechs can be built by serving the community financial institution movement. Large businesses can be built. Yeah. So playbook now exists. And in a lot of ways, you started writing that playbook and I added a few chapters. And I think the playbook is more or less complete. How do we build that scale?
Kris at the ready with questions in tow. Explore fintech's future, its highs and its lows.
In interviewing smaller financial institutions a lot lately, I find that the biggest difference between those that I internally feel they're going to thrive versus they're going to suffer over at some point is leadership that's willing to embrace and actually encourage change. Mm-hmm. The organizations that I interview that are doing the most exciting things are those that are not afraid to fail. And you know, you've been in the industry long enough. Today, with the ability of having all of these partnerships and collaborations to do what you want to do better than you ever could have done them in the past, allows smaller organizations to embrace change with partners that have gone down the path. It's like having a GPS system where you go, you know what, if I know where I want to land, if I know my destination, I have this crowdsourcing capability with a lot of experts that allow me to get there, knowing the shortcuts and the diversions and the changes I have to make along the way. This is not a solo path, but you got to embrace the ability to use those partners and say that instead of running down the field, both holding the ball, I'll use a football analogy, you actually are going to lateral it and let them run down the field for you. That takes trust, but it also takes a mindset that says, what's the worst that's going to happen? You know, Are we going to have a bad quarter? Maybe, but we may learn from that as well.
When out in the industry there arose such a clatter, we sprang to the pod to discuss what did matter.
From payments to lending, from data to trust, each topic ignited a meaningful thrust.
Let's take opportunities then. The question for them is, do you take opportunities then to consolidate some specific services so that you don't have to merge away and not be there for your members anymore? At least not in the same form that they're used to.
So I think there's an opportunity, at least for those mid-market guys, to say, I am going to use shared services, bring down my expenses a lot, and maybe I'm not such a great merger target anymore as well. So
right.
That's kind of like the other way of looking at it. I think that there's an opportunity there as well. What I also will tell you is, having sat through many mergers, is that using shared services technology makes it easier to do a merger. Mergers are way easier. So you as the credit union, you can focus on the culture of the merger, right? What are the two problems in mergers? Your technologies go like this and your cultures go like this. So wouldn't it be great if you as the credit union can just focus on the culture, let your shared services organization worry about putting those other pieces together.
With visionaries, leaders, and innovators, we welcome them all.
More rapid than APIs, the ideas they came, and Kris introduced them, each guest by name.
Now Jay, now Ashish, now Jim and Will, to the mic with your stories, your drive, and your skill.
Then we built the full-on brokerage capabilities. So we registered with FINRA as a broker-dealer. We're also registered as an investment advisor with the SEC. So we have the full infrastructure and operating capabilities behind the scenes to be able to operate this platform for the credit union, so that it's not just a fintech and the credit union has to do everything themselves. We're the full operating model behind the scenes. We offer fractional share trading, so that if members don't have the ability to buy a whole share of Tesla, as an example, they can buy that in dollar increments, and we do the math behind the scenes to handle the full share trading, but giving access to those partial shares to members that need smaller dollar investment type of opportunities. And if they don't want to select their own investments, we have a robo product which they can answer a series of questions to determine suitability, and then we generate results and put them into a variety of different ETF models that come out based on their risk tolerance and their investment input that they put into the system. So there's a lot of opportunities for them to start the investment process, do so with low dollars. What we heard from a number of our clients is that they lost significant deposits over the years to other digital platforms like Robinhood, platforms like Coinbase, platforms like Fidelity, and other brokerage platforms that have the full service capabilities. But also, when they have those services, they try to sell them all kinds of other things that compete with the credit unions. So this is really a way for us to put the credit unions on a level playing field with the larger full services firms, and do so in a low cost manner that provides these kind of broader product opportunities and non-interest deposit revenue opportunities to the credit union as well.
From startups to giants, let's answer the call. Now speak on the pod. Inspire us all.
We have a ton of members out there who so need us. So need us. Why? Yep. Oh my gosh, our rates are insanely fabulous wherever you may be. And most importantly, we were created to help members wherever they are in their lives. That is what that's our charter. That's what it says. And so we've got to be able to figure out how to do more of that to help our members. These are really crazy times. I believe in economy speak, banana pants is the technological term for the times we're living in. So banana pants, yes. Because why? Because it's banana pants. Because who gets rates as crazy as they are, yet spending still so high, yet inflation, yet somehow we haven't managed to actually technically go into recession yet. Ooh, I said the word, sorry. But you know what I'm saying? Banana pants, okay? Yeah. And in all of that is our members who are like, I just want to make sure that I have shelter, I have transportation, I have travel and play, however that looks like to me. And I have rainy day and retirement. And we are so here to support you and do that. But we got to do it today.
From the rise of new tech to member delight, we captured the sparks of fintech's bright light.
Our tagline is we make tax filing as easy as uno, dos, tres. And really it is that simple. So uno is you sign up. Dos, you just take a picture of your W-2, answer a couple of questions, and we give you the outcome. If you like the outcome, then you take a picture of your driver's license, enter your social security number, because most people don't have their card on their person. And then take a picture of your debit card. A single filer can pay as little as $24.99, and then hit submit, and then the taxes are filed. And so we're using, OCR technology, just like banking apps use when you take a picture of your check, the front and back, very similar processes. And then our secret sauce is based on how a customer answers those questions. We do the heavy lifting. So the customer doesn't need to even figure out, do they need a Schedule 1? Do they need a Schedule B? How do I take information from this form onto this form? All of that is done using our technology.
With laughter and learning, our mission was clear: to make fintech engaging, insightful, and near.
That is amazing. You have inspired me, because it really is everything you've said, right? You've got to be willing to risk it all. You've got to be willing to play flat out, and you got to be willing to, stay up at night and be worried about your team and worried about your staff and worried about the product and worried about your customer and worried about this and that, right? I mean, that's the life we chose. What's easier to learn? Is it easier to learn an NFL playbook at running back or to learn to be an entrepreneur, and why?
A playbook, NFL playbook in the NFL at running back. It's like way easier, totally different, easier. See, look, what people understand, man, when you're an entrepreneur, when they read that, co-founder, right? You're thinking that's a glamorous thing. It is not a glamorous thing, because that means co-founder means everything. It means finance, it means biz dev, it means sales, it means growth marketing, it's branding, it's relationship, customer services, it's HR, it's policies. You know what I mean?
Especially as the COO, it means you have done it all.
Trust me. You know what I mean? So, give me that NFL running back. Let me just focus on my plays, and we'll be good.
And then in a moment, we'd wrap up each show with takeaways ready for listeners to grow.
We'd sign off with thanks to our guest and the crew for making each podcast feel vibrant and new.
It's 2023, so we are contractually obligated to ask about artificial intelligence, right?
Yeah.
So how do you think... It's 2024. Let me hold on. Let me rewind this.
All right. Well, I thought you were setting up a hypothetical scenario, so I didn't even think you're wrong. My mind went back a year. I'm like, all right, we're in 2023. So,
Evan, assume I'm wrong. See, that's
right.
where
Yeah.
That's why I have a producer to tell me what year it is. Good Lord Almighty. Okay, so let's
I had already set the clock on my computer to 2023. I mean, you're the host. I figured you were right. So.
I love it. That's going to be a great outtake. That's going to be one for the end of the year.
And as we look to next year with ambition in sight, happy podcasting to all, and to all a good night.